Thank you for tuning in to another episode of RIA Collective. I'm your host, as always, Charlie Van Derven. I've got a great guest today, not our traditional guest. Those of you who have listened to the show before know that we often interview people who have made that breakaway transition and gone from big firm to high pressure sales and quotas and proprietary products to an independent space where they can actually truly be a fiduciary to your clients. My guest today isn't an advisor anymore, but came into the industry as an advisor and actually runs a really great coaching outfit. Knows his thing with coaching. I can tell you in the last few weeks, I know he knows his thing with marketing too. We're going to have a deep discussion on the habits that successful advisors focus on for real growth. So today I'm joined by Dr. Jon Randall. Jon's company is XFA Coaching, Extraordinary Financial Advisors Coaching. The website xfa.coach, or is it, Jon, is it .coach or .coaching?
Yeah, .coach. You nailed it.
.coach. I got it right. Jon, thank you for joining me and taking some time out of your day to record another episode of RIA Collective.
It's so great to be here. I'm a fan of what you're doing. I love the episodes. It's great to hear from advisors, what they're doing, what their experiences are. So it's great to hear what's really going on out there. And it's certainly the trend, more advisors going independent, which is very exciting. And to hear that scary leap that they've made and that it's not so bad, it's great to hear those stories and real life accounts for what it was like for them. But in the growing and scaling the financial advisor business, that's what for over 20 years, my team and I have been focused on doing. And it's a great business. There's such a need in America, right? The hunger for a financial advisor is alive and well. So demand is not stopping, it's increasing. But the number of advisors providing advice is declining. So it's good business to be in, but the game is just changing as we grow and scale because the capacity that maybe you had getting to this point, certainly not the same going forward. So I love not only talking about how do practices really grow and scale, no matter what stage that they're at in the business, whether they're a small solo or they're doing 8 or 9 figures in revenue, there's some fundamentals that apply to everybody, even though everyone's independent journey is different. I just think that there's constant constraints that I've noticed that hold advisors back at all these different levels. And so I like talking about those, not just what are the best practices, but what are the constraints to overcome to help advisors get to that next level.
I love it, Jon. We'll get to that. Let's start with how this happened for you. 20 years of coaching. You look way too young, by the way.
Yeah, I look a lot younger than I am. Yeah,
to have 20 years. I grew the mustache to try and hide my age, but of course it's going pretty gray, so I don't know if that's actually working anymore.
Yeah, so I started as an advisor, just those listening, back in 1999, straight out of college, undergrad. I went to college in Massachusetts where I met my wife. My wife was from New York, and I figured what a cool place to start in the financial advisor industry. Had a great experience there for about 5 years. And my wife had a brother in North Carolina who was playing baseball, and we fell in love with the weather, super cheap real estate. So we moved to the college town where he was in because he was going to be staying. And it was when I moved in 2004, all these advisors around here said, what are those big producers in New York doing? Would you show me? So I started to show them best practices. And I grew really quickly. And people said, how did you grow really quickly? Because it took me probably 1.5 years to rebuild what it took me 5 years to build in New York. And so I showed them the best practices. And what I learned in doing that is it wasn't the best practices that always worked. For some reason, they weren't doing them. So I'm thinking, what's wrong with these advisors? But they had other constraints that were getting in the way. For example, they just wanted to get new clients. The number one source of new clients is from referrals from existing clients. So What's going on in their delivery? Why is it not that referable? And you peel the onion back further. Oh, you have way too many clients, way too many of the wrong clients. You have a capacity issue. So that was the constraint. So once I started to help people with their real issue, then it led to what they actually wanted, which was getting new clients. And they grew extremely fast. And then word just spread across the country. And 20 some years later, we work with many hundreds of advisors and some of the very fastest growing in the industry and many in the Barron's top 100.
I saw that. So you and I did my research on you when we got acquainted a few weeks ago or a month ago or whatever it was. And since that time, man, I see a ton of your content.
Yeah, we put a lot in out there.
yeah, you're doing really well. And I know I'm knowing a little bit about marketing in the industry. I know the ability to track and make sure that your ads are showing up for the right people and that sort of thing. We'll get into marketing in a little bit here, but you talk about the priorities. Is it really as simple as right sizing the book, which I think a lot of advisors struggle with, and then just really being able to tailor that referral conversation? Is it really that simple?
It almost can be. And at the end of the day, the main role of the founder of the business, whether it's just you or you're scaling with other advisors on your team, you as a founder, you're the growth engine. So whatever methods of growth are going to help you grow, yes, that should be the focus. Now, there's two ways to grow any business: do more with existing clients, get new clients.
Yeah.
So everyone's excited about the shiny new object to attract new clients. And it's all those ways that have very little results for advisors it's funny. They just get all excited about these things that don't work. So there's this cycle I see entrepreneurs and financial advisors go through of they have this uninformed optimism of, wow, if I just posted some social media content, maybe I'll get like all these new random people will see me and I'll grow really fast. And then they go and do it and they realize nothing comes from that because it's really hard to do. You have to be Mr. Beast, who's the most followed person on the internet. It's really hard to do. Then they have informed pessimism that, okay, that doesn't work. Sure. Then they look for the next shiny new object and they have informed optimism again. So we go through these cycles, but you're right. Right sizing the book is a very overlooked growth method.
Agreed.
Retaining clients, doing more business with existing clients, it's the fastest way to grow. And we've seen people grow by 50% or double in just 1 year, just by taking a look at what they're actually doing. And we use some industry averages to help point out what might be the opportunities in their book. But I think so many advisors just think, I just need to get new stuff. It'll help fix all my problems. But if we think about building a building or a house, there's a foundation that we don't see underneath. Then there's a first floor, and this is the second floor. Most advisors just want to start focusing on the second floor, right? Give me more. I just want a really big second floor. But we need a strong foundation. You need a strong first floor that can hold the second floor. And to me, that's what is your structure and capacity is the foundation you don't really see. What are you doing for clients? Are we optimized what we're doing for clients? Then if you just do those things, advisors just start attracting new people without doing anything if your services are designed for the right people. But it's those steps that make it easy for advisors to attract a lot of new clients. And we just see it time and time again, those that work through those initial constraints, they just bring in a lot of new people without even asking, without even doing any weird marketing methods. It just happens because it is a relationship business, and it is a business. If you do a great job, you can get referrals.
Yeah, agreed 100%. I think one of the struggles for advisors is, I see it every day actually. Number one is we talk about right sizing. There's a huge struggle in being able to give away some of the weight of the book, right? So you've got smaller clients who, man, if you come through, there's some firms that you come through, the expectation is you've got 350 or 400 clients, and that's insanity. How do you provide any good service to any of those 350, 400 clients? I think every advisor is different, but if you're exceeding 100 clients, I think you're in a lot of trouble as a sole proprietor with an assistant.
Yeah, and I think a lot of the industry studies and stats really support this. So I constantly just look for these things and read and buy studies. We mostly get their information on pricing. What are financial advisors pricing their services at? But they also have been providing a lot of other interesting information. In the last year, they said that 91% of financial advisors are reporting productivity issues due to too many of the wrong clients. Fidelity came out with a study. They said over half of the clients of financial advisors are not profitable for them.
Yeah,
and Investment News every year, which is just solely focused on independence, which I love. There's a lot of great data in that particular study. They say the same thing every year, that practices are getting clogged up and that capacity is the number one issue. So really, from a constraint standpoint, it's usually the founder having too much on their plate. It's the most common thing that we see. And you're right. If you look at where's the revenue coming from with an advisor that has 300-400 clients, you're right. The top 100 clients is producing the lion's share of it. And usually the bottom half might be low single-digit percentage of the revenue. And it's, why are we wasting time with all these people? I always make a funny joke to people and say, it would be far more efficient to take a pile of money and light it on fire in the parking lot than working with all these hundreds of clients and losing so much money and wasting so much time.
I like that. Yeah, that's cool. When you come across an advisor in that situation where they're just super, I'll call it bottom heavy, right? Where they've just got this huge book of huge head count, but not the assets they're looking to manage. What I've always looked at that as you've got two ways out of this is you either grow your team to support what you've got, excuse me, or you've got to cut, that bottom, I'll call it the bottom fat, right? You've got to be able to get rid of that. So how do you approach that with an advisor when that's their situation?
Well, you're right, Charlie. Those are great solutions, but advisors, they struggle with them. And so I went down the rabbit hole of psychology, just learning about humans and how we are. And that's the reason I got a PhD in psychology, is to help advisors more. But the way we are as humans, our brain craves equilibrium. So we're predisposed to keep doing things the same way we have been doing. Our brain loves following a script. And all of us are taught from the beginning, more clients, more assets, right? We're just bringing anybody at the beginning because that's where we're at. And so as we progress in our careers and our business, that doesn't work anymore. In fact, it works against us at some point. So I help people with the psychology of understanding, okay, you're predisposed to have this, what I've been doing is the way. Something different is not the way we do things around here. We do it this way. So that's number one. The other, in the other underlying roots why they don't want to let go or transition some of this compensation is they'll make up excuses why that, this pays for part of my office, this pays for this or that, or my tech stack, or this team member, right? But it's really looking at how can you do more with those better clients. So usually if they can find a way to generate some more revenue with other clients that replaces the revenue of the smaller ones, then they're okay with it. So either they actually they put the small ones on ice, they go do that, they bring in that new revenue very quickly, then they feel okay about letting it go. Or if they just crystal clear see, this is so easy for me, I could capture this new revenue, let me let go of these smaller ones so I can get to it. That's one of the better ones. And I tell you why I'm a fan of that, Charlie, because one of the mistakes we see in scaling, and scaling to me is growing beyond the owner, right? Hiring other advisors to manage revenue for your firm. And as you get into that, the first advisor that everyone does is bring them in and let's dump all the small clients on them, right? If they mess it up, it's no big deal. But if you're going to really generate a profit margin on other advisors on your team scaling this business, it doesn't work. You're never going to generate a profit margin on that advisor. They're going to be miserable working with these small clients. They're never going to learn how to work with an industry average 1.5, 1.6 million a client. They're stuck in purgatory. You as a business owner is kind of stuck in purgatory from a profitability standpoint. So I'm a bigger fan of let's find a better home for these clients. There's probably a practice out there that's suited to help those people. You don't have to kick them to the curb. You can have care and help them find a different home. But for your business may not be built to service everyone, right? It might be built to service a smaller group of clients who you help best. And that's what usually most of the practices do, and build a team to service those clients more, right? Grow with those kind of clients, not just average clients or not just small clients. Grow with those top ones. This right here, this is advisors that actually get through this are some of the ones that grow absolutely the fastest.
Yeah. And I to the point of finding a better home for those smaller clients, it's the responsibility, right? If we're going to call ourselves fiduciaries, and we can't service a small client because we're not built for it anymore, continuing to try to do that actually doesn't serve the client.
It doesn't, and it's a hard one. I know I struggle with this, and I know a lot of your listeners are just good people like you. They're nice people. They want to help others. And the one that helped me let go is someone hit me between the eyes with, I'm actually hurting those people by keeping them around because I can't really help them. Right. I think I can, but I don't have the capacity to. Therefore, I'm hurting them, and I'm hurting my best clients who need more of me. It wasn't until then that I said, oh my gosh, now I really need to find a solution for these people because you're right. They're better off somewhere else that's suited and has the capacity to service them.
Yeah, very cool. So right-sizing the book, getting good at that referral conversation, because I know I've watched a lot of advisors have very awkward conversations about referrals.
Oh, yes.
Yeah, it can be painful, man. I coach towards ask for the right introductions. So I don't, and maybe we're splitting hairs there between referral and introduction, but doing that upfront homework, knowing who it is that you want to know versus, hey, client, Mr. or Ms. Client, send me your family and friends. Being able to say, hey, John Smith, taking an introduction approach to it, I think is an easier conversation for most advisors.
It's less scary. It's less scary.
Yeah. It takes the burden off the client.
Yes. Yeah.
Right?
There's less stigma about the whole thing. Referrals has this whole stigma, but if you're really dialed into where's your revenue per client point that you want to be? If you look at, if anyone listening, look at your top 10% of clients, what's that revenue point per client? That's you really want to be focusing. And I just suggest let's look through them and really develop who's your avatar or who's your ideal client. And within that, who has people just like them in the world? Right? Do they have access to others at their work? Are there other businesses they own just like theirs? Wherever it is or your top clients are, that's really where to focus. It's too hard to break into a pond that you're not in or a target market you're not in. It takes way too long, and no one listening has that much time. But it's you're already in. If you work with a client and they have other people like in, you're in. And it's just how do we get access to the other people like them? And those are fun conversations. But if you can really frame with those clients that you specialize in them, and here's why, and help them see the qualities in other people, it's just, I see some of the best in the industry that bring in so much new assets. They really just do some framing. They don't really have that awkward referral conversation. So we do a big, large annual event every year with a couple hundred advisors from all over the country. And this last one we did in April, we had 3 advisors up on a panel who all organically attract over 100 million net. And I say net because we all bring assets in. There might be assets going out for life events, retirement, income, things like that. So all organic from referrals. So these people are really doing it. And one in particular is bringing in 250 million top line, one lady, all by herself. And so, yes, they have some teams behind them helping the service, but they've gone through this stuff. They've gone through the foundation of really managing capacity. They're so dialed in on client optimization. They know what they're doing. They know who they're doing it for. And they just started to frame with these clients, you know what? We help people just like you, whether it's business oil and owner and gas. They really get down to narrow, not just business owners. I hear that one so much. Business owners are great clients of advisors, but there's 28 million in America, and the majority of them don't even generate $1 million in revenue a year. They're probably not the best ideal clients. So you got to get down to which ones are. Maybe they're business owners who own multiple car dealerships, right? Maybe it's the more specific you can go and the more you can identify with your ideal clients, what makes them special and why you specialize in them. They can see it in other people a lot easier.
This is a perfect segue into something I want to talk to you about before we wrap. The first step, I think, in any business development strategy, whether it's referral, whether it's prospecting, whatever that is that ideal client profile, right? That ICP. Mm-hmm. Who are they? What are their problems? What are the solutions you provide? How do you provide value? Which then leads to all of your messaging. Whether that's that conversation for referral, whether that's your website copy, whether that's your social content, your email marketing, whatever that is. So you and I have both been around this industry long enough to watch marketing evolve like crazy.
Yes.
I'll tell you, when I first started selling websites to advisors in 1998, John, it was hard to sell a $25 a month website. Our competition was the Yellow Pages, right? Anyway, so that world has evolved greatly. You do a wonderful job, honestly. In that conversation we had a month ago or whenever it was, and me checking out your website, like your content's in front of me a lot now, and so you guys are doing a great job. Tell me a little bit about, from a marketing perspective, what's the most important for advisors to be focused on?
Yeah, there's one single thing, and I didn't make any of this up or learn it. I learned a lot from coaches and consultants myself, probably the most from Alex Hormozi. He's my coach. I go to see him once a quarter.
Awesome.
But I think it is everything that you have has to speak to, and I use the term avatar as just a marketing term for target market, right? Your ideal client. So everything has to speak to them. I see most advisors are generalists, and they might talk about, we help retirees. That's super general, right? Yeah. Maybe it's retirees of XYZ company in this location, right? The more narrow it is, the better. So anything you have, your website, anything that's content based, like social media. To me, anything you have there on social media should be speaking to your content. Sometimes Google yourself advisors, sometimes your social media page will show up before your website. So it's not so much a place where advisors really get a lot of new people. It's the place where referrals check you out. So people will check you out there first. So everything on there needs to speak to your target market. So it's really that surround. It's interesting how, yes, referrals are the main biggest way that advisors get new clients, but these surrounding things of what does your website say? Can we get rid of all the clutter and just speak to your best clients or your best prospects? Same thing with anything social media. Can it just speak to your ideal people? Exactly, you're trying to get that narrow market. The more you can narrow and speak to them, the more they'll get it. And speak about what you're helping your clients with, right? What's your ideal client worried about? What are their pains? What are the things that they're trying to accomplish that you help them with? That's the things you got to really talk about in here. And I know some people might have, whether independent or how big their RIA is, they might have some restrictions of what they say. Some might not have any at all. But that's really the difference is, are you speaking to the listener, not saying what you want to say?
Yeah, I agree with you. You talk top of funnel, middle of funnel, bottom of funnel. We can do all the funneling. And if your messaging is not on point for the audience you're trying to attract, none of it matters. Really, honestly. Yeah. So, Jon, talk a little bit about your podcast before we wrap here. I want to make sure that we get some listeners over to your podcast because you do a great show. I listened to a couple episodes and lots of great advice. So plug that for us.
Yeah, we interview some of the stars, like I talked about. It's the same podcast as my book, The Extraordinary Financial Advisor. The book's been done for a while. I was waiting until the doctor part popped on there earlier this year. But the podcast is same content. It's really, we interview star advisors. What are they doing to grow and scale? Some of the outliers that we work with. So it's really fun to check them out. But the book's fine. We give everything away in there. But one of the best things I think that we do is we offer a super low cost workshop for just checking out what your constraints might be, learning what these other top people are doing to grow and scale. So if anyone wants to check one of those out, we would welcome your listeners, Charlie. They're all incredible. I love your content. I'm sure your listeners are just as close to you. But on our website, xava.coach, there's info about the workshops, or if you want the book, whatever you want. We even got free stuff out there. But the workshops are just a great way to learn. We get tremendous feedback from them. And there's some quotes for some really top advisors, what they're saying about them.
Awesome. Dr. Jon Randall, man, you're changing advisors' lives. Thanks for doing that. And also, like, part of my mission is helping to drive this industry to that independent space where not beholden by a proprietary product or high pressure sales quota, and the ability to really truly act as a fiduciary client first. Thank you for your role in that, man.
Hey, thank you. You're making a difference. I love seeing the movement, and gosh, there's just so much for this industry, and I love that you give, and I love giving too. So let's keep giving value, and good things will happen.
Absolutely. All right. Thank you for anybody who took your time to listen to Dr. Jon Randall, Extraordinary Financial Advisors, xfa.coach, and myself, Charlie Van Derven, on the RIA Collective. We appreciate you tuning in. And Jon, I am eternally grateful for you giving some time and some wisdom and some advice to the advisors that listen. Thank you, man.
Thank you, Charlie. Appreciate it.